What's up, everyone? It's Sean again from Max Option Trading. The trade I'm gonna go over today is gonna be Amazon call scalp. We actually played calls this day. I've been playing puts all month, all year long. Just because of the market condition, and put side setups have been, in my opinion, better for me, and it's been working out. So I've been just getting puts. But Amazon did have a really good call side setup here. It was a quick scalp. I didn't really leave runners to the next day, close everything out. It was a weekly. And again, 0DT, very, very risky. You could make, millions off of it. You could also go bankrupt from it. So be careful. It was just a quick, Friday scalp. 0DTE got filled at $96 per contract for 100C. What I was looking at, let's look at the daily chart here on Amazon. First, we have a downtrend here, right? Which then we broke initially, right? And then we started ranging and consolidating. And from the initial point of the breakout, let me get my arrow tool here. From the initial point of the breakout right here, right above 92.71, 93 area, this area is what triggered this breakout of this, how long is this? 6-month downtrend, right? So that means there's going to be a lot of buying pressure sitting in this 92, 70, 80 to 93 area. So what I wanted to see after the initial pop, I wanted to see the buyers defend this 93 area. Because if not, that means the breakout volume was weak and it was a rejection. And in fact, looking down into an hourly chart, we can see that this 92, 60, 70, and we did do a little liquidation move there, but we are holding. Buyer step. This is the initial breakout. We had a weak pre-market. Buyer stepped in. Again, dropped really hard. Buyer stepped in. Buyer stepped in. We did liquidate these two lows here, right? Broke it briefly and then gapped all the way up, right? We didn't play any of these. What I was waiting for was Amazon to break out of this whole range in general. And you can kind of make an argument that we have a little small, flag formation here, right? Not the prettiest one, but, how do uptrend look? Let me show you guys. There you go. Make a move, down, you make a move, down, you make a move, down, right? And this part is pretty much what we're seeing here. The initial breakout, and the initial breakout, we call this a point of interest. The point of interest, POI held, POI held, POI held, okay? And I was looking for actually either side of the play, whether we break down below this liquidation point of 91.50 or we break out of this area, right, with volume. I don't want to get liquidated. I don't want to get faked out. So I want to see huge pop in volume. And I knew that if we broke above this range area, this flag, I knew Amazon will run at least for a good, profit, because 100 is also a psychological level, right? Any stock, any even number, hundreds are really psychological resistance or slash support there. So that's what I was looking at. Reset chart view. Sorry. So that's what we got here. Okay, and now I'm gonna play the video. We took the entry quite early, pretty much right at open. Okay, so we'll go down to the 5-minute chart. Actually, oh yeah, this is the 26th. Oops. Oh yeah, there you go. Yep. All right, so this is the day. Okay. 27th. I want to see above this area, 9,900 in general. Okay. We took the call scalp right at open. It's a pre-market here. Entry at 4:32, 2 minutes after market open, right? Oops, sorry about that. All right, there you go. Looks much better. Okay. Market opens there. Okay. So number one, huge volume there, right? Huge volume bar. Okay. It was very similar to the prior day, but we did engulf it. This volume bar did take over prior day's breakout attempt, which we got rejected there, right? So that's one good sign. Two, we bursted through the $100 psychological resistance area with ease, right? So now what I want to see is some small consolidation, form a flag, okay, and we make another move up. Let's look at 3-minute time frame since we're scalping. Okay, so we have the initial pop, we're consolidating. I don't want to see this break back below 100. I don't want to see a candle close back below 100 because that'll be another rejection. Okay, so we took the entry. I took an opening entry right around here, just because from the sheer volume here. And what I also love seeing from the pre-market is consolidation pre-market and breaking out. Let me get my box tool right over here. Nice consolidation pre-market, and we break that range with nice volume, and we also had a pretty decent follow-up volume there as well. Okay, what I want to see is break back above this small mini flag that we're about to draw. Okay, starter position there from the volume. Okay, rejection, rejection, boom, rejection, rejection. We pull back and we break out of this small flag here. Follow volume, increasing volume, increasing volume, increasing volume, right? And there we go. Small pullback there, still above, still holding above 100. Okay. And we take off. And we trim some on the way up. And I close my runner at 87%. Filled at $1.80 per contract, $180. Again, it was a 0 DTE. So regardless of the upside or downside we had, I just closed it off. Can't complain about 87% banger on a 0 DTE scalp, right? And I've actually been getting this question a lot about the RSI. If it's overbought, why would I get into calls here? Because RSI may indicate that the chart is overbought, but if you look at all the other chart structure that we went over, like the bull flag, the volume, the downtrend resistance, the 92 to 93 area holding, making a new high, all those structures will overtake the RSI. Because at the end of the day, RSI is just a supplemental tool. What matters more is the chart structure. So anytime I see multiple confluences on the chart, sometimes I do ignore the RSI. Of course, it's the best if these guys were down here and the oversold, right? That'll be even more high probability, right? But if it's like 5-1, like 5 confluence versus 1 RSI just being wrong, then I'm okay with that as far as risk to reward.